Hi everyone, welcome back to ASX Market Watch and charting trend signals around the world. Guys, thank you very much for joining me today. It's absolutely fantastic to have you here checking out the markets for just a few minutes on your weekend. Well spent, I imagine. Look, we're just going to jump straight into it because there's so much to get through. Obviously, as you know, we look at the entire world from a chartist point of view. That's basically what we do. But also what we're going to do is we're going to have a look at a few other things like the VIX, obviously the volatility index. Just really quickly, this is still at lows that we haven't seen in quite some time. That means that there's low volatility out there at the moment. In fact, just a few days ago or about a week ago, we touched 4 or 5 year lows. So that means, not much volatility out there at the moment. That means the market is rising or falling in a very steady manner. So that's great news for equity markets at the moment, and potentially that's because of all the cheap money that's sort of flowing into the markets at the moment. As you're probably well aware, we've been over it many times. Really quickly, let's have a look at some sectors. I mean, obviously the All Ordinaries. A few days ago, 3 days ago, we finally closed above the 4,400 level. So obviously this is like a short-term entry, like a short to medium-term entry signal on the All Ordinaries for myself. Now, if I was to use that as an entry signal, the really short-term stop I would put here, just below the 50-day moving average. That would be about 43.20 or 43.25. And then further to that, if you wanted a medium-term stop, I'd put it below this one here, which is about 42.30. So about 100 points difference between those two. Really simple stuff. But I mean, in the meantime, apart from Friday's action, which wasn't too happy, apart from that, it's just really kicking along. And what we've been doing, I've personally been buying since probably about January. As you can see, we've had these series of higher peaks and higher troughs, and the individual stocks since then have just been absolutely going gangbusters. I mew, really quickly, what have we, like AIX has been doing really well. BLY has been doing fantastically. DOW, absolutely brilliant. I mean, happy days. COF, Coffee International, that's been a great stock for me as well, personally. TOX has been a great one, absolutely fantastic. IMD is probably my biggest winner currently as well. As you can see, just a beautiful, smooth trend. Happy days. Of course, there have been ones that I've lost out on or that aren't doing so well. Oil Search is sort of in a sideways pattern. I mean, really, there are some stocks. Where's another one that I've had a loss on recently? Or SGM is currently not doing as well. It's probably just sitting below my entry point here at the moment, entering around about here. But yeah, I mean, those are the individual stocks, and that's why, I mean, looking at the indices on the All Ordinaries, if we were to do that, say for instance, then the way we do that is we, let's have a really quick look. There we go. That's a good time frame to look at it. And, like consumer discretionary not doing very well. Energy not doing that well. Financials is now outperforming. Healthcare is absolutely killing it. And, I actually entered a healthcare stock this week, Biota Holdings. Absolutely brilliant. It's doing well so far. Information technology is just currently outperforming our market as well. Materials is still down in the doldrums, so your resources still not doing very well. And industrials is doing very well as well. Property only just outperforming at this stage as well. So there are more and more indices that are starting to outperform the overall market. This is a fantastic sign. It means that the groundswell of stocks is starting to grow. There's more and more entry signals happening. Obviously, if you're overseas on the Dow, looking at in the Americas on the Dow Jones, S&P 500, or the FTSE, this has been going on for some time. You will have had many entry signals on those markets for some time, but this is just starting to occur in Australia, which is absolutely brilliant. So anyway, that's pretty much where we're up to. The All Ordinaries really quickly, if we were to give ourselves a target, and I do this every week, currently what I'm looking at is a target of around 4,950 to 5,000 on the All Ordinaries. An early target would be 4,600, so that'd be our first target there. If it breaks down below 42.30, that's an exit signal for myself. That's a bad sign. So yeah, that's pretty much where I'm sitting at the moment. Not rocket science, very simple. How good is it though? Oh, I love those individual stocks. They're absolutely going gangbusters. It's great stuff. I like it. Really quickly, S&P 500. I mean, look at that. That is probably one of the sexiest looking charts I've seen in a long time. Look at it. And I mean, looking at a target, I mean, obviously anyone with two eyes or even one eye or even probably a seeing eye dog could tell you that this thing is in an uptrend. It's not rocket science at all. But it's reached its first target, 1380. Its top target on the S&P 500 is 1500. So that is the sort of top target that I'm looking for personally on the S&P 500. And hell, I mean, all we have to do is follow the trend. It's definitely well above all of its trend following indicators, as you can well see, above the trend line, above all your moving averages there as well. Not rocket science in any way, shape or form. The FTSE, really quickly, it's starting to break down. It's made a short-term exit signal, and that's your little down sort of thing there, little zigzag down. And it's also what it's done is it's closed below, its trend line and the 50-day moving average. So that's a short-term exit on the FTSE. What I'm anticipating on the FTSE is this. See this medium-term trend line and also your other moving averages like your 150-day and your 200-day moving average. I anticipate that the market will, if it does fall further, it'll find support at these levels here. And if we could just, probably what I would imagine is it just does that sort of action. But yeah, that's basically, that's what I'm looking at the moment based on the price action that I'm seeing at the moment. Obviously, and you've just got to look at the forces of support and resistance on the charts. That's basically what I'm looking at there. There's going to be a lot of support at the 5,600 level on the FTSE. Until then, it's in a short-term downtrend, a medium-term uptrend. So that's where it is right there. If you look at other markets in Europe, like the German DAX, for example, this is still well within its uptrend. It's looking very similar to the S&P 500, and as you can see, well above its uptrends. So it's looking happy days on on the German markets, for example. On other markets, potentially just a little bit weaker. Really, really quickly, the Shanghai Composite. This is the other one that I was looking at. And the reason I look at this is because people have found that the All Ordinaries, the Australian market, tends to follow the Shanghai on a medium to longer term basis. In other words, the money flow is very similar. So what we're looking at the moment is I really wanted the market to find support at 2300. Instead, it just burst straight through it. So it used a lot of effort to get through that level, and it did. So what we're looking at is it's now in a short-term downtrend. It's also in a medium-term downtrend. So this is bad news, basically, as far as money flow goes. On the Shanghai Composite in China, it's downtrends all round. If you can short that market, I'm not sure what the rules are in China, but if you can, that's what I would be preferring to do based on where the market is heading, because we believe that 3 out of 4 stocks will follow the overall market. And all we have to do is just wait and see if this will actually flow through to the Australian market as well. We've just got to follow the trend and see what happens. Really quickly, the Nikkei as well, still going great guns, still well above all its uptrend indicators. And looking at the trend line, what I'd expect is a little bit of consolidation around the 10,000 mark, just because it's a nice big round number. If it does continue, I mean, this is your trend line, so it's finding trend line support right here, and it's met all of its targets, its initial targets, and its medium to longer term targets based on this little trend so far. So really, all you've got to do is just follow the trend right now. That's what we called our entry signal way back there. It's gone up about 10%, a bit over 10%, or probably about 15% since then, which is amazing for an index. Absolutely amazing. But yeah, really, I think that's pretty much the world from a chartist point of view, guys. Not rocket science in any way, shape, or form. Hope that has helped in some small way, and I will see you next week. Happy trending until then. Bye for now.